Merry Christmas, guys, and let's get into it. What's happening? The elephant in the room, crypto's down, prices are weak, sentiment is extremely low. Retail engagement is essentially non-existent right now. And it's got people frustrated, it's got people fearful, it's got people bored, questioning why they're even here. And let me tell you this, it's completely normal. But today I want to break down why crypto is struggling. The real reason why, what the data actually says, and why this is still one of the most compelling investment spaces as we enter a new year right around the corner. So if you like the sounds of that, let me know you're in the building. Engage with the video, hit the like button down there, share this video out, subscribe to the YouTube channel, follow me on X. Make sure you guys are locked in. It is not the time to run away. Crypto isn't down because it failed. It's not down because it's over. It's down because conditions changed, and conditions will change again. The main reasons. First, let's talk about this. Tight financial conditions, high interest rates, drained liquidity from risk on assets. That's what happened. Stocks, venture capital, real estate, crypto all felt it. Now, stocks, gold, silver, they've been doing better. I think AI kind of stole crypto's thunder a little bit, but this is a snapshot in time. This is an accumulation phase. It's a transition phase because the institutions are here in the crypto market. And retail got exhausted. After years of volatility, scams, broken expectations, retail stepped away. And this is multifaceted. They disengaged. But at the same time, crypto's growing up right before our eyes. The market is no longer driven by purely hype bullshit, to be frank. It's now reacting to macro data, interest rates, capital flows, just like traditional markets. This is not a collapse. Let me be clear. It's a reset. And you want to be on the other side of this when it flips. The smart money, they're investing right now. Despite price weakening, Bitcoin's hash rate is near all-time highs. Stablecoin usage continues to advance and grow. On-chain settlement volumes remain massive and growing exponentially. Institutional infrastructure has continued to expand, not contract. And at the same time, retail trading volumes are near cycle lows. Social engagement is muted. Search interest is depressed. However, my last video like this on X did get 60,000 views, so hopefully a lot of people are seeing that. If you guys can, again, help us out posting this up and sharing it, because we together need to do our part to tell people this is the time when sentiment is low. Historically, the exact combination, which means strong fundamentals, weak sentiment, this has preceded the most powerful multi-year runs and biggest run-ups on the price of Bitcoin and other risk-on crypto assets, top altcoins in particular. Markets don't bottom when everyone is excited. They bottom when participation disappears. Let me repeat that. Markets don't bottom when everyone's excited. They bottom when participation disappears. I'm not saying we've hit the bottom. I'm just saying it's pretty close. But why is this still a great space to invest in? Why Bitcoin? Why crypto? Crypto still represents a few different things to me. Number one, it's the fastest settlement rails we have on the planet. Okay. In a world that we live in that is global, this is necessary. It is also the most programmable financial infrastructure ever created. And it's a parallel system to traditional finance that continues to gain legitimacy. And now we're seeing TradFi and DeFi merge into one. We're seeing tokenization of real world assets, institutional custody expansion, regulatory clarity, improving all around the globe. Capital slowly moving in, but structurally into the crypto space. The narrative has shifted from get rich quick to build, integrate, and scale. That's how real markets are formed. This environment doesn't reward over trading, leverage, chasing narratives. It rewards patience, conviction, high quality asset selection. The biggest mistake people make is leaving the market right before conditions improve. By the time rates ease, liquidity returns, retail feels confident again, prices will already reflect that. Positioning happens before belief returns, not after. Crypto isn't easy, guys. If it were, everyone, and anyone would win. This phase feels boring, feels uncomfortable, feels unrewarding, but historically, this is where long term investors are made. The question isn't whether crypto survives, it's whether you're still here when the next chapter begins. And again, if you want hype, this market won't give it to you right now. But if you want opportunity, perspective, long term conviction, you're exactly where you should be. Subscribe if you value clarity over noise. We're here every single day. Again, Merry Christmas, Happy Holidays, because the quiet periods are where real positions are built, ladies and gentlemen. Appreciate you all for watching. Have a blessed day with your friends, family. We'll see you guys in the next one.
Hi guys, don't forget to sign up for a free daily update